All right. I think it's been, a couple weeks since I did one of these, so I wanted to kind of go over what I was doing this week in terms of market activities. I would kind of characterize this week as a bit of over trading, honestly. Like, I came out ahead $463, which is like meh. Um, I didn't do as well as I would have liked on the CPI number that came out Wednesday. And I say that because so last time I kicked myself for not getting increasingly aggressive right before and even after the number came out. But of course, this time the same reaction didn't occur, and I kind of expected it to. So if we look, that was this day right here. Actually, let me bring this time frame down. You can see it a little better. That was this day right here, was the CPI day. And you can see, like, I was already positioned short for like 3 or 4 days ahead of time. Yeah, so I initially got short this day when we crossed into like my blue. Oh, you can't really see it because it's behind me. Um, we crossed into an area of interest for me this day. We were up here above 296. Is that right? No, I'm wrong. I was a week ahead. See, I don't know what I'm doing here. Okay, it was this day. So it would have been last Friday. Uh, yeah, so I got short this day on the actual NASDAQ 100 on QQQ. I bought a little piece of SQQQ Monday, a little bit more when we popped up on Tuesday, and then I also shorted more of the underlying QQQ that day as well. Now, when the actual number came out, like I expected, the number was bad. It was actually slightly worse than I expected. Most investment banks and other places were putting out estimates between like 8.6 and 8.8. And I was leaning on that 8.8, but we got 9.1, right? So it came out and we had this little pop, and I was calm through that because I was like, this has got to be just a head fake with how bad this number is. Well, we came down here, right? Like, we had this pops up and then we get this big spike down, when the whatever it is, algos or actual people acting in the market, whatever it was. Well, then we got started to get this little pop, which I assumed was kind of like mostly short covering. Uh, right in here, I got more aggressive, right? So I started adding to positions, making my cost basis worse. Now, had I just covered right in this area here, this would have, like, this week I could have just covered here and walked away and not done anything Thursday or Friday, and this week would have yielded a little shy of 2K, between about $1,800 and $2,000, had I covered in this area. But last time we saw 3 consecutive days of downturn. So if I go over here to this daily chart, I'll make this bigger. This right here is the last time, right? Now, I was sized more aggressively last time because I had a lot more conviction that the number was going to be bad. So I was actually building into my short position. I initially shorted the Qs on this day above this little line right here, and then I shorted more, shorted more, shorted more. And then where I was really kicking myself is that so the CPI number last time was due out on a Friday, which this is that Friday. You can see that big gap down there because this chart, unlike the futures, doesn't show the pre-market activity. So this just shows where we opened, not where it gapped down in the pre-market like this would do here. Now, last time, of course, you can see we pushed down on that Thursday, which gave me confidence, put my position on the Qs, my position on SQQQ, my position on SOXS, all well in the money, gave me a good cushion. But I should have been adding as it moved up, but then I was like, I don't want to mess up my cost basis. But anyways, I think I spoke about that, in the last video, so I don't want to, dwell on that too much. But this time, we get that spike down, and I started adding. Well, what do we get this time? You know, if we look over here, it was, this is the day it was out. So we did get that spike down and put us in here, but then we came right back up, and that threw me off. So I ended up only taking, whereas I could have had almost a little shy of 2K. I ended up only taking about $700 off of that trade, which feels kind of shitty, but it is what it is. And then I lost a little bit on a yeah, that's what it was. So I added to, let me see if I can get this here to look properly. Where's my button? So if you see on this screen, I have these other ETNs here. I added to SOXS and SQQQ on that spike. And then so not only did I not take as much as I could have off of where I was positioned, but I ended up losing money because I was initially positioned like in this area. I ended up taking small losses on SQQQ and SOXS because I was buying into them like, oh, this is what happened last time. I need to get more aggressive because I was pissed at myself for not being more aggressive last time. So I start adding in since I have a profit cushion, but it bumped my cost up so much that when the market opened, we recoiled right back up. Like you can see here, it just boom, boom, like hits right back up. I started taking loss. I was like, okay, I'm just going to get out of all this. And that's why I walked away from the week with not even the 700 I got off the CPI print. I walked away with only 460 because not only did I, mistake that execution, but I was building into those other positions when I shouldn't have been. Now, after I saw how much we recoiled this day, I actually ended up going long. So I covered most of my positions in this area when the Qs was right here. And I mean, yeah, sure, we can look at SQQQ, well, the SOXS fund, because this is the fund that tracks SOXL and SOXS. So not only did I go long, I mean, there's like an 85-90% correlation between the NASDAQ, between QQQ, and this fund. So it's like basically what the NASDAQ does, this does. So that's what I usually just focus on looking at this. Yeah, so I ended up going long on the NASDAQ after it popped up here. It popped up here and then pulled back into this volume weighted average price, which is my light blue line you see here. And then I just kind of like went to the gym, and the next day we actually came down and tested this level. So I was slightly red on that position, but instead of like panicking, I kind of set like a mental stop right here. I was like, if we take out yesterday's CPI print low, I'll stop out. No questions asked, But what I did is when we were right in here, like we kind of bounced up right here and then came down there again, I actually added to the position. So I added I doubled the position, I should say. So half my total size was added. So I bought some right in here and some right in here. And then I at the same time as this started going up, because I was like, wow, if we couldn't get knocked down on that bad CPI print, what's that mean really? That means maybe we're going to see a bit of a summer rally. And I kind of like how this chart down here looks. Like, you see how we've been building slightly higher lows? I know this chart looks really convoluted and like there's a lot of stuff on there, but it's areas and stuff that I have my eye on. So I like to have those lines on there. I know a lot of people prefer like a cleaner chart. But I use where's the button? I use this PC for those charts. You can't see them right now, but like if I click down here, I have like the longer term charts, and whatever I have on here will pop up over here, and I can look at it in a bit more clean of a fashion. God damn it, hit the wrong button. So I have those on my other PC really, so I can get that perspective. I just don't need it always. But yeah, I'm kind of liking this action right here. Just how this is forming, and higher low, shows some accumulation. Now, we're really not seeing good volume yet, so I'm not like convinced that this is going to be a sustained rally. But I mean, if you look at it, like, could we come up here and fill this gap? Get into the low 300s? Why not? We closed at what, 292-ish. So I think potentially we're in for a little bit of a bounce and a rally, but I don't see it being sustained because we're getting into earnings, and I don't see earnings and forward guidance being issued in a positive light. I mean, I don't know. It's hard to say. Stuff that's been throwing me off is like that move on Micron. Like, they announced and they issued really bad guidance, and the stock like dipped, but then got bought right up. And I think some of that has to do with the sector, because there is the CHIPS Act in the works. So Micron, Nvidia, AMD, Applied Materials, like a lot of those companies are gonna have a bit more resilience right now, because people are thinking like maybe they will pass that bill and it'll be really positive for the sector, and they'll rock it off, and maybe they will. I mean, they probably will. I mean, Pelosi's husband bought a shitload of Nvidia, so I mean, their track record's pretty good. But yeah, so maybe the chips have a lot of room to run. But anyways, what I was saying back on this play is I bought the Qs in here, and then I added the position in here. Now, seeing how aggressively we bounced and that we didn't break this low, I entered SOXL and TQQQ, which is just a 3 times levered QQQ. So whatever this QQQ does on a daily basis, TQQQ moves 3 times that percentage. So if the QQQ is up 2%, the TQQQ is up 6%. It's as simple as that. And that's on a daily balance or a daily calculation. And it's not always perfect. Like, it'll be off a little because they rely on investment banks. Who issues that one? ProShares, I think, has to go in there and manually balance that and buy a certain amount of derivatives and stuff to get that proper balance. But they're pretty damn good at it. But anyways, I bought SOXL, which I think my lines are still on. Yeah. So I didn't get the greatest price. My price was that blue line right there, 13.13, if I can see it properly. So I didn't have huge size, because even though we did see strength, I already had the Qs underlying, so I had a decent amount of exposure, and didn't want to get too aggressive. So right as we saw this, and we saw this like right here, this little pullback kind of intraday flag pattern, you could call it. I bought right somewhere in here. I don't exactly know which one, but it's irrelevant. My cost was 13.13, bought in here. And I sold mistakenly a bit too early. So let's go out here. So we got, what number was out on Friday? It was like consumer sentiment or some number was out on Friday. I forget what it is now. But I didn't want to be holding into that number. So I actually sold in the pre-market right after 6 o'clock. 6 o'clock is the earliest I can execute orders. So I was looking at it and I was kind of like, eh. So, and then I saw a couple red candles in here. So I was like, fuck it. I'm just going to sell before this number. And then, of course, I could have gotten more out of that trade. But it still ended up being decent. I mean, from where I bought it to where I sold it, we're talking a 9.7% gain with a hold time of like, what, 22 hours approximately, something like that. So not even a full day of hold time, 9.5% approximately, 9 3/4 pretty much. I'll take that. So now let's go over to TQQQ. TQQQ, I bought it at the same time during that little pullback in the Qs when the ICE Semi fund was making its little flag like I showed on SOXL. I was like, fuck it. Let's get even more exposure. If we're getting bought up here, we're forming a higher low. Let's get in a little heavier. So I bought, you know, not a huge position in this either. I think it was only 150 shares. It wasn't, I was bearishly bullish, you know, like I'm still a bit too biased to the short side in the current like macroeconomic environment to really want to be too aggressive on the long side. But anyways, I got a little bit of gains out of that after having lost or got out of that 700 and then losing like almost half that 700. Well, so to end the week, and this is why I was saying I was over trading, is because even with all this going on, I was also, I started out trying to go short oil, and then I bought the opposite side of that trade and ended up net long oil by a little bit. But that trade I lost a little bit on, I think like, and by a little bit, I mean like super insignificant, like $60. And if we look at crude here, what I did is I tried to go short oil. Now this is using an ETN, of course. I was using UCO and SCO ETNs. So I wasn't actually trading the futures, but I was creating exposure to the futures price action. Now, when we got down in here, this morning, I was like, oh, wow, I was just watching. And in hindsight, I mean, look at that. That was a great kind of capitulation bounce. That would have been really smart to take advantage of, but sadly, I did not. So when we got up in here, I started building a little bit of a short position, and I was feeling pretty confident in this range, right? And then we got back there, and I was like, okay, well then in this range, I was, you know, in the red on that short, and I started building into long position and tried to like outweight my short position to account for the loss on it. Well, that trade, the long trade ended up flat. I think it was literally plus like 10 or $15. Like, might as well have not been a trade at all because once again, over trading. And then the other trade ended up down, you know, like I said, $60 or so, something also pretty insignificant, but like it was stupid. It was too much action. I was like, oh, I want to be involved in this and this and this. Is classic over trading. It's never good. You know, you need to walk away. I've been doing pretty good at whenever I feel like I'm over trading, I'll read this book or read my Series 57 exam book or whatever. But yeah, definitely over trading this week. And then on nat gas, I made a little bit of a gain. Where are we at? This day, so like we saw nat gas, and I'm bullish on nat gas overall, but obviously I'll play it both ways when I see the opportunity. So we kind of were getting out of where a lot of this volume shelf is, and I put a decent amount of weight on the volume, like volume done at a certain price, you know, because like the mean is constantly changing because the price is moving in a direction, right? But like there's a high probability that you're going to move back into those high volume areas, at least in the near term. So I actually got short, not all the way up here, but I bought a little short in here and then a little more short right in here. And when I woke up the next morning, this is all the pre-market. You know, you can see the, you know, time down here. So regrettably, I didn't get more long because it did come back into an area where I had previously stated in Discord that I was interested in going long on it. But I was already in so many positions. I had both long and short oil and TQQ and SOXL and the regular Qs, and it was a lot. So I covered that short as we got this little pop and then a little drop down. I covered that short, and I did think to myself, man, I should buy Boyle, which Boyle and Cold with a K, KOLD, are the ETNs that I use to get exposure to nat gas. So those are what I'm actually executing on, because once again, I don't trade futures. I never have before. Maybe someday I will. I don't know. I just feel more comfortable executing on the ETNs because that's what I know how to do. So yeah, and then of course when I don't go long, nat gas has like one of its best days ever. It was up. Look, 7.8%. Like the Boyle ETN is a double leveraged. So like just buying that in the morning and sitting on it, you'd have made approximately, I mean, obviously this is accounting for not getting the very best price, but you would have made over 10% just buying it anytime the first part of the day. Ooh, had like a hiccup / burp. That was kind of odd. But yeah, so that was a little disappointing that I ended up getting long it. But as we can see, it did end the day in a very bullish fashion. But like I said, things are generally mean reverting. And when you have a day that's that bullish, there's a decent probability that we're going to see a little pullback because we're reaching this area where we got sold from before. You know, like right in here, we ended up getting sold from. And we are going into the colder months. You know, we're getting into the middle of summer, and energy companies are going to want to start locking in their nat gas supply for the winter months where people are going to be using more natural gas to heat their homes and all that kind of stuff. And that's one of the reasons why I'm bullish on nat gas in the long term. But I am thinking about taking a little piece short if we're still hovering up here in the pre-market on Monday here, because as you can see last time, you know, we had this big move up out of the 5 handle into the 6 handle, and you know, then we're kind of moving sideways in there, gap up, and luckily through this area up to about here, I was long. And I played it a couple times, getting these little bounces overnight, which was pretty nice. I did not capture this short because that was more aggressive than I thought. But that's kind of what I'm thinking may happen again. You know, like you get this bounce up and this bounce up, and it's pretty bullish overall. But also at some point, the natural gas suppliers need to be selling onto the market, you know, to lock in prices. And as the energy producers need to buy it, you know. So I think maybe we'll see maybe something not quite this aggressive. Like, what is this drawdown? You can't really see this because it's right behind me, but we're talking a 10% drop almost, like between 9.5 and between like 9 and 10% drop in, what is that? About 2 hours. So if Monday morning we come, you know, we see a bit of a drop in the natural gas price, it may pull back somewhere between, like, I would shoot for like something between like 6.7 and 6.4, maybe 6.5. Yeah, 6.5. And pulling back into there, since those are double leveraged ETNs on KOLD, yeah, you could get, I mean, you could be looking at, what are we thinking here? God damn it. You could pretty conservatively be looking at 8 to 10% gain, maybe even more, but conservatively 8%, because once again, it's double leveraged. So if this thing even drops 4%, that's an 8% gain on KOLD. Yeah. So maybe I'll end up getting short natty gas for a quick trade. Once again, being bullish on it, I don't want to hold something like that very long. But yeah, that's about all I got. I've also been kind of watching copper because I hear copper is like a really good gauge of like economic activity. And whenever copper starts to get a bid, that means people are pretty bullish and positive on the economy. So I'm using it kind of as a recession probability indicator, if you will. The reason that I heard it explained that copper's like that is because it's used in so many industries. It's used in like all sorts of electronics and by proxy of electronics, houses, because all the electrical wiring and components within houses, in plumbing, copper pipes for plumbing, and it's used, in everything because cars all have wires, and those wires are generally made of copper. So it's used in so many different areas of the economy that when copper is getting bid up, it means different industries, many different sectors are having activity and seeing upward movements and not recession type movements. So I've been keeping an eye on that, but not trading it at all. The only ETN I know that tracks it is this JJC, and its ATR is like 0.5, and that's just too slow for me. I don't want to have equity tied up in something that's moving 50 cents a day. That's bullshit. But yeah, so that's pretty much what I did this week. I should mention too, if this rally continues, look at this base. Look at this base, this glorious base on, this is NYFANGT. This is the index that the ETNs FNGU and FNGD use to get their tracking from. So FNGU and FNGD, once again, are triple leveraged ETNs. They're rebalanced daily. They're not to be held for long periods of time. Ideally they're used as a daily instrument, but you can do all right holding them. The longest I personally ever feel comfortable holding them is like maybe 3 to 5 days. Generally for me, I'm in them. It's either 1 or 2 days, but I have held them up to like approximately 5 days before. But yeah, look at like this. If we keep getting a rally, just look at this on the daily chart. That is just a perfect little springboard. We're not breaking through. We're just not breaking this area right here around. Like you can see the low here is about 4,700, just a little below 47. But every time recently it's came into like even 48, it was bid up. And then the last couple weeks of trading right in here, even right about 5,000. If it gets below 5,000, it's getting bid up. So if the NASDAQ keeps going up, this is something that could see a pretty strong move. Same with the semiconductors too, of course, once again. This is the fund, ICE Semi, that tracks, or that SOXL and SOXS are tracked from. Same thing with this, like with the NASDAQ going up and the huge correlation between this and the NASDAQ and the CHIPS Act going through Congress, you could see a great move out of this. And the chips are so beat up recently. I mean, the daily's down there, but to put it on this bigger chart, look at this. This is since the beginning of 2021, this gray line right at the edge of the screen here, if you can see that. And we're just down, a little relief rally that one towards the middle into March into the beginning of April, and then down, and just this was that last CPI print that was really nice. But then this was the CPI print this time. So it didn't even come close to making a new low on this last CPI print. And it was bad news. And when things aren't making new lows on bad news, that in itself is a pretty strong indicator, to coming price action. So for me personally, like I said, I sold this a little too early. I could have got about a little more than another point out of it from where I was in at 1313 on SOXL. But I think for me, I'd be looking for this to kind of come into this area here and then see how it acts. And honestly, what I may do is just buy some SOXL, like almost blindly, and then hedge it with SOXS. And then if it starts to break out above this area and not get sold off, back down into this area that's about 600 or under 600, if it gets into here and starts to break out of here, I'll just drop the hedge side, and then the gains on SOXL are greater than the loss from the hedge side of SOXS. That's how I trade a lot of times, is basically market neutral. Just the side that wins is weighted heavier than the side that loses. But yeah, so some pretty positive action. One bullish thing to note is that Jim Cramer is supposed to ring the bell for the New York Stock Exchange on Monday. I heard on Twitter or something. So that could be pretty bad news, because pretty much from what I hear, I don't really watch him, but from what I hear, everything Cramer tends to touch is it's a bearish indicator. But anyways, yeah, that's what I did this week. Came out a little bit ahead, not near as good as it could have been, but I think that's just something you have to accept with trading. You're never gonna absolutely bottom tick or top tick a play, and people who say they do are liars, like 99.9% of the time. So is what it is. It's part of the game. And hopefully this week I will be able to capture a little bit of alpha and go from there.